Property and Casualty Exam Prep Zoning. Question 1. During a licensing review, which auto coverage pays for damage to the insured auto from hitting another car? Option A, bodily injury liability. Option B, uninsured motorist bodily injury only. Option C, collision coverage. Option D, a comprehensive coverage. The correct answer is option. Collision covers upset or impact with another vehicle or object. Comprehensive coverage is wrong because comprehensive covers other than collision losses such as theft or hail. Bodily injury liability is wrong because bodily injury liability pays others for injury the insured causes. Uninsured motorist bodily injury only is wrong because uninsured motorist bodily injury covers injuries from an uninsured driver. Question 2. When comparing policy terms, an insured keeps a small predictable loss exposure instead of buying insurance. Which risk management technique is this? Option A, duplication. Option B, retention. Option C, transfer. Option D, avoidance. The correct answer is option. Retention means keeping part or all of a risk instead of transferring it. Transfer is wrong because transfer shifts risk to another party such as an insurer. Avoidance is wrong because avoidance means not engaging in the activity. Duplication is wrong because duplication is not the standard technique here. Question 3. On a revision question, a policy change is added to modify coverage. What is this called? Option A, subrogation. Option B, coinsurance. Option C, endorsement. Option D, arbitration. The correct answer is option. An endorsement amends the policy by adding, changing, or removing coverage terms. Subrogation is wrong because subrogation is recovery from a responsible party. Coinsurance is wrong because coinsurance is a sharing requirement. Arbitration is wrong because arbitration is a dispute resolution process. Question 4. For a practice question, a policy pays to replace damaged property with new property of like kind and quality without depreciation. What valuation is this? Option A, replacement cost. Option B, book value. Option C, the actual cash value. Option D, a market value only. The correct answer is option. Replacement cost pays the cost to replace covered property without deducting depreciation. Actual cash value is wrong because actual cash value subtracts depreciation. Market value only is wrong because market value reflects selling price and may differ from repair cost. Book value is wrong because book value is an accounting value. Question 5. For a practice question, money collected as premium by a producer should be treated how in review item 55? Option A, as money that never needs records. Option B, as fiduciary funds handled according to law. Option C, as a gift from the insurer. Option D, as the producer's personal spending money. The correct answer is option. Premium funds are held in a fiduciary capacity and must be handled properly. As the producer's personal spending money is wrong because personal use can be conversion or theft. As a gift from the insurer is wrong because premiums are not gifts. As money that never needs records is wrong because records are required for accountability. Question 6. While reviewing a policy, insurance works best by combining many similar exposure units. Which concept supports this? Option A, latitude and longitude. Option B, First Amendment. Option C, the law of large numbers. Option D, depreciation recapture only. The correct answer is option. The law of large numbers helps insurers predict losses more accurately with many similar exposures. First Amendment is wrong because the First Amendment is constitutional law. Depreciation recapture only is wrong because depreciation recapture is a tax concept. Latitude and longitude is wrong because latitude and longitude are geographic coordinates. Question 7. When explaining coverage, insurance works best by combining many similar exposure units. Which concept supports this? Option A, latitude and longitude. Option B, depreciation recapture only. Option C, First Amendment. Option D, the law of large numbers. The correct answer is option. The law of large numbers helps insurers predict losses more accurately with many similar exposures. First Amendment is wrong because the First Amendment is constitutional law. Depreciation recapture only is wrong because depreciation recapture is a tax concept. Latitude and longitude is wrong because latitude and longitude are geographic coordinates. Question 8. When explaining coverage, which term means the cause of loss? Option A, hazard. Option B, peril. Option C, premium. Option D, deductible. The correct answer is option. A peril is the cause of loss, such as fire or wind. Hazard is wrong because a hazard increases the chance or severity of loss. Premium is wrong because premium is the policy cost. Deductible is wrong because deductible is the insured's retained amount. Question 9. When advising a policyholder, a policy pays to replace damaged property with new property of like kind and quality without depreciation. What valuation is this? Option A, book value. Option B, replacement cost. Option C, the actual cash value. Option D, a market value only. The correct answer is option. Replacement cost pays the cost to replace covered property without deducting depreciation. Actual cash value is wrong because actual cash value subtracts depreciation. Market value only is wrong because market value reflects selling price and may differ from repair cost. Book value is wrong because book value is an accounting value. Question 10. When advising a policyholder, a guest slips on the insured's icy steps and sues. Which homeowner's coverage may respond? Option A, coverage C, personal property. Option B, coverage D, loss of use. Option C, coverage F, only for the dwelling. Option D, coverage E, personal liability. The correct answer is option. Coverage E addresses claims for bodily injury or property damage for which the insured is legally liable. Coverage C, personal property, is wrong because coverage C covers contents. Coverage D, loss of use, is wrong because coverage D covers additional living expense or loss of use. Coverage F, only for the dwelling, is wrong because coverage F is medical payments and does not cover the dwelling. Question 11. For a practice question, a 5-year-old roof is damaged and payment subtracts depreciation. Which valuation method is used? Option A, stated amount only. Option B, replacement cost without deduction. Option C, the actual cash value. Option D, the agreed value. The correct answer is option. Actual cash value generally reflects replacement cost minus depreciation. Replacement cost without deduction is wrong because replacement cost pays without depreciation subject to policy terms. Agreed value is wrong because agreed value uses a value agreed in advance. Stated amount only is wrong because stated amount is not the same as depreciation-based ACV. Question 12. While checking exclusions, a policyholder must have a financial chance of loss in the property being insured. What principle is this? Option A, subrogation. Option B, liberalization. Option C, adverse selection. Option D, insurable interest. The correct answer is option. Insurable interest means the insured would suffer a financial loss if the property is damaged. Subrogation is wrong because subrogation is the insurer's recovery right against responsible parties. Adverse selection is wrong because adverse selection involves higher risk applicants seeking coverage. Liberalization is wrong because liberalization broadens coverage under certain policy changes. Question 13. When advising a policyholder, a loss directly caused by fire damages a wall. What type of loss is wall damage? Option A, indirect loss. Option B, moral hazard. Option C, speculative loss. Option D, direct loss. The correct answer is option. Physical damage to the wall from fire is a direct loss. Indirect loss is wrong because indirect loss is a resulting loss such as lost rental income. Speculative loss is wrong because speculative loss includes chance of gain. Moral hazard is wrong because moral hazard involves dishonesty. Question 14. On a property and casualty item, a producer uses misleading statements to replace a policy. What practice may this be? Option A, twisting. Option B, risk retention. Option C, salvage. Option D, indemnity. The correct answer is option. Twisting involves misrepresentation to induce policy replacement. Indemnity is wrong because indemnity is restoring financial position after loss. Salvage is wrong because salvage is remaining property after a loss. Risk retention is wrong because risk retention means keeping risk rather than transferring it. Question 15. For a practice question, insurance works best by combining many similar exposure units. Which concept supports this? Option A, latitude and longitude. Option B, First Amendment. Option C, depreciation recapture only. Option D, the law of large numbers. The correct answer is option. The law of large numbers helps insurers predict losses more accurately with many similar exposures. First Amendment is wrong because the First Amendment is constitutional law. Depreciation recapture only is wrong because depreciation recapture is a tax concept. Latitude and longitude is wrong because latitude and longitude are geographic coordinates. Question 16. For a practice question, a policy covers only causes of loss listed in the policy. What coverage approaches this? Option A, named perils. Option B, all losses without exclusions. Option C, open perils. Option D, self-insurance. The correct answer is option. Named perils coverage applies only to perils specifically named. Open perils is wrong because open perils covers direct physical loss unless excluded. All losses without exclusions is wrong because all losses without exclusions is not how standard policies work. Self-insurance is wrong because self-insurance means retaining risk. Question 17. When advising a policyholder, a loss directly caused by fire damages a wall. What type of loss is wall damage in review item 72? Option A, direct loss. Option B, speculative loss. Option C, indirect loss. Option D, moral hazard. The correct answer is option. Physical damage to the wall from fire is a direct loss. Indirect loss is wrong because indirect loss is a resulting loss such as lost rental income. Speculative loss is wrong because speculative loss includes chance of gain. Moral hazard is wrong because moral hazard involves dishonesty. Question 18. When advising a policyholder, workers' compensation Part 1 pays what in review item 80? Option A, damage to customer cars only. Option B, statutory benefits for employee work injuries. Option C, homeowners' contents theft. Option D, personal umbrella losses. The correct answer is option. Part 1 provides benefits required by workers' compensation law for covered work injuries. Damage to customer cars only is wrong because customer car damage is garage keepers or liability exposure. Personal umbrella losses is wrong because umbrella losses are excess liability. Homeowners' contents theft is wrong because home contents theft is homeowners' property coverage. Question 19. When explaining coverage, a policy pays to replace damaged property with new property of like kind and quality without depreciation. What valuation is this? Option A, actual cash value. Option B, a market value only. Option C, a book value. Option D, replacement cost. The correct answer is option. Replacement cost pays the cost to replace covered property without deducting depreciation. Actual cash value is wrong because actual cash value subtracts depreciation. Market value only is wrong because market value reflects selling price and may differ from repair cost. Book value is wrong because book value is an accounting value. Question 20. During underwriting review, a building is insured for less than the required percentage of its value and a partial loss occurs. Which clause may reduce payment? Option A, coinsurance clause. Option B, no benefit to Bailey clause. Option C, liberalization clause. Option D, pair and set clause only. The correct answer is option. Coinsurance encourages adequate insurance to value and can penalize underinsurance. Liberalization clause is wrong because liberalization broadens coverage after policy improvements. Pair and set clause only is wrong because pair and set deals with partial loss to matched items. No benefit to Bailey clause is wrong because no benefit to Bailey prevents Baileys from benefiting from the policy. Question 21. In a risk management example, a producer offers part of the commission to persuade a customer to buy a policy when not allowed by law. What unfair practice is this? Option A, coinsurance. Option B, subrogation. Option C, appraisal. Option D, rebating. The correct answer is option. Rebating is giving an unlawful inducement not specified in the policy. Subrogation is wrong because subrogation is recovery from responsible parties. Coinsurance is wrong because coinsurance is a policy condition. Appraisal is wrong because appraisal resolves value disputes. Question 22. During a licensing review, a covered fire makes an apartment unlivable and the insured pays for a hotel. What type of loss is the hotel cost? Option A, direct loss to building. Option B, indirect loss. Option C, moral hazard. Option D, pure risk only. The correct answer is option. Hotel expense is a consequential or indirect loss from the covered property damage. Direct loss to building is wrong because direct building loss is the damaged structure itself. Moral hazard is wrong because moral hazard involves intentional wrongdoing. Pure risk only is wrong because pure risk is a category of risk, not the expense type. Question 23. During a claims discussion, an extended reporting period in a claims-made policy allows what? Option A. Creating new coverage for future incidents. Option B. Reporting certain claims after policy expiration. Option C. Avoiding all deductibles. Option D. Changing auto symbols. The correct answer is option. An extended reporting period lets claims from covered prior acts be reported after expiration. Creating new coverage for future incidents is wrong because it does not cover new incidents after the policy period unless stated. Avoiding all deductibles is wrong because deductibles still apply if applicable. Changing auto symbols is wrong because auto symbols are unrelated. Question 24. While reviewing a policyholder becomes careless because insurance will pay. What hazard is this? Option A. Named peril. Option B. Moral hazard. Option C. A morale hazard. Option D. A physical hazard. The correct answer is option. Morale hazard is carelessness or indifference caused by having insurance. Moral hazard is wrong because moral hazard involves intentional dishonesty. Physical hazard is wrong because physical hazard is a tangible condition. Named peril is wrong because named peril is a listed cause of loss. Question 25. While checking exclusions, a CGL policy coverage primarily covers what? Option A. Personal auto collision. Option B. Employee work injuries only. Option C. Bodily injury and property damage liability. Option D. Damage to the insured's own building only. The correct answer is option. Coverage A of the CGL addresses bodily injury and property damage liability. Employee work injuries only is wrong because employee work injuries are workers' compensation exposures. Damage to the insured's own building only is wrong because the insured's building damage is property insurance. Personal auto collision is wrong because personal auto collision is auto physical damage.